It's shaping up to be a volatile week for global markets, and the catalyst came straight from the White House. President Trump issued a sharp warning against Iran while declaring Tehran's countermeasures as totally unacceptable, suggesting that relations between the two nations are in a deadlock. With the US dollar gaining fresh positive momentum, global bonds falling, and inflation risks remaining elevated, let's have a look at what the technical signals suggest about dollar yen, pound dollar, and Nvidia stock, and what are the key catalysts during the week for those assets. So starting first with dollar yen, and we can see that the price keeps rising despite risks of FX intervention from Japan. The price is touched the 159 level earlier today, but we can see that it remains constrained near its 50-day moving average ahead of the FOMC meeting we need due on Wednesday. While the report will be important in terms of providing some extra details about what policymakers believe about inflation risks and whether they have started to think about future rate hikes despite Kevin Walsh replacing Powell. Kevin Walsh is considered as a lot of people believe that he will support rate cuts in the coming months, which is kind of contradicting to what is happening with inflation risks at the moment. And obviously, any higher inflation numbers could actually make rate cuts not suitable for stabilizing for the Fed to achieving its price stability. Now, as regards dollar yen, well, we need to clear close above the 158.75 to reach the 160.30 region. But fears of FX intervention from Japan are also weighing on this pair, and perhaps we may have an extra budget from Japan, which aims to actually balance rising oil prices, and maybe Japanese inflation numbers could also provide some fresh evidence about whether the Bank of Japan will proceed with a rate hike as soon as in June. So it's a mixed outlook for dollar yen, but technically it seems that the bias is still skewed to the upside. If we manage to close above 160.30, then the next target will be the 162 territory, or even higher. The price may attempt to reach this resistance trend line near 163.35. Now, if FX intervention emerges and if FOMC meeting minutes fail to support rate hikes, then in this case, we could see the price falling towards the 157.85 level, a break of which could rise us back to the 156.35 territory. And then deeper than that, we could see a more important battle taking place near the 200-day moving average, and this key long-term support trend line drawn from the lows of 2025, seen between 154.50 and 155. Now looking at pound dollar, well, it's going to be a busy week in the UK in terms of data releases, employment data, inflation numbers, retail sales, and flash PMI numbers will be all out of the UK this week. But perhaps the political turmoil may dominate the headlines as Prime Minister Starmer is facing another leadership challenge following a defeat in local elections, as well as some resignation from his Labour Party. So it seems that Starmer is facing another tough political period, and if political uncertainty persists, then pound dollar could continue to the downside. Nevertheless, from a technical perspective, we can see that the RSI and the stochastic oscillator are very close to oversold levels, so perhaps there is limited room on the downside for further losses. If the 1.33 level doesn't hold, then perhaps the 1.32 and 1.3235 territory could act as support. If this region fails to hold, then we may see an outlook deterioration, in which case all the attention will turn to the 1.1390 region, where this former resistance trend line is placed. Now, as regards monetary policy and the Bank of England, well, their expectations for a 25 basis point rate hike as soon as in June. So, if inflation numbers surprise to the upside, and if any flash PMI numbers also show some improvement, suggesting that the economy can still uh, manage to survive more rate hikes, then in this case we could see the price rising up to the 1.3520 number where the 20-day moving average is located. Then beyond that, so the 1.36 level could be the next target, while higher than that we could see a rally up to the 1.37 number. And finally, looking at Nvidia stock, well, the stock will face earnings from Nvidia on Thursday. It's going to be a crucial release. It will be the last earnings report from Magnificent Seven, and perhaps it could provide the next direction in the record rally in US indices, as well as in the record rally of Nvidia stock. The price hit a new all-time high of 235.92 last week. And we can see that it's already very close to this resistance line, which connects the highs from 2024 and 2025. That's around the 240 numbers. So if Nvidia's earnings surprise to the upside, then we could see another leg higher. And if the 240 proves easy to overcome, then another target could be the 250 and 255 region, where the 161.8% Fibonacci extension of this downfall is located. Now the downside, if earnings disappoint, the price could head towards the 217 number. That was a former resistance. Lower than that, the 211.50 may attract attention as the 200-day moving average is approaching this territory. While lower than that, I believe that a more crucial battle could take place around the 205 number, because that's where this support trend line is placed. So failure to hold here would actually put this upward trajectory into question, likely triggering a new decline towards the 195 number. So that's everything I want to share with you guys. I hope you liked my analysis. If you did, please subscribe to this channel. We'll be back with more technical updates next week. In the meantime, I wish you had a great trading session. So that's a goodbye for me, and see you next time. Bye bye for now.